Hello, this is Jordan, and this video is being recorded on Tuesday afternoon, March 3rd, 2020. And in this video, I'm going to discuss what I have deemed the most important gold chart for 2020, and that's gold's performance against the stock market and also gold stocks' performance against the stock market. So in this first chart, at the top, we have gold against the S&P 500. At the bottom, we have GDX against the S&P 500. Both charts are daily line charts. That moving average you see, that's the 400-day moving average. And at the top, we can see how the 400-day moving average has done an excellent job of defining the primary trend. And if we go back just a couple years, note that the rallies in 2017 and early 2018, those failed right near the moving average, which was trending down. But we fast forward to now, or at least in the past 6 months, the ratio has not broken out yet. However, it is very close to doing so. And note that over the last 7 or 8 months, the ratio has twice tested the 400-day moving average. Now it's above it. The ratio is starting to slope up, so that's encouraging. On Thursday, the ratio actually closed, and I believe close to a 3-year high. Then we had a big decline on Friday. Now, several days later, it's back up very close to a 3-year high. So it's very encouraging what we're seeing in this ratio. And simply put, we want to see that ratio hold these levels or trade even higher, and then hold above this level right about 0.55, hold above that level indefinitely. That would confirm that there is a new trend going on here, which is capital is shifting away from stocks and going into gold. And at the same time, the GDX against the S&P 500 ratio is just as important. In the last 12 months or 15 months or so, it's emerging from this major historic double bottom, which happened. The first low was the second half of 2015, and then the second low was basically towards the end of 2018. And I've said this before, but if you look at any gold stock index that goes back decades or even 100 years, like the ones that I have, this double bottom is basically it's like a 90-year low. So gold stocks relative to the stock market, they're emerging from a very significant low. However, to really signal a shift in that capital is moving, in favor of gold stocks instead of just stocks in general, we need to see that ratio surpass those light red lines, those horizontal lines, right around 0.011. And so the ratio is not quite there yet. But, it's been holding above that 400-day moving average for a long time. And again, go back, look at 2017 in August. It rallied, it peaked there right below the ratio. Then at the end of 18, early 2019, it was battling with the ratio, went below it. And, basically since the Fed shifted in policy and did its first rate cut, this ratio has been able to hold above that long-term moving average. And by the way, I don't show it on this chart, but for both the ratios, the ratio is above the 200-day and the 400-day moving average, and they're both aligned with the 200 being above the 400. So that also looks good. This last chart I have here, because I don't want to make this a long video, but this precious metals outperforming the stock market. It's important for obvious reasons, and we want to see a new trend take hold, and we should be watching out for this, over the weeks and months ahead, because, if this happens and we see gold and gold stocks really outperforming the S&P 500, that's going to kickstart a real bull market in precious metals, and we have not had that. Since 2015. We have not had that. The stock market has still been in a bull market. It's done really well. Gold stocks and gold, they've done fairly well, but not as well as they would have done in a real bull market if they were really outperforming the S&P 500. But on a more micro level, gold outperforming the S&P 500, that can also be, somewhat of a leading indicator for the sector. And just looking over the last 4 years or so, and at the top here I have gold against the S&P, and then at the bottom I have GDXJ, and I've pointed out here, or I've sketched in the vertical lines, the light blue vertical lines, at significant bottoms for the gold to the S&P 500 ratio. And after those bottoms, it had an accelerated move to the upside. And if you look at the bottom, you can see that after bottoms in the gold to the S&P 500 ratio, GDXJ tends to bottom, a couple months after that happens. Now, if you go back to 2008 and you look at that, that was like I want to say like a 3 or a 4 month lag, but that was still really significant. And so, what we're seeing is, look at early to mid-February, that could be the last significant bottom in the gold to the S&P 500 ratio. And so if that holds and the ratio is able to trend higher from here, hold above 0.55, that bodes very well for GDXJ also making a move higher. But note that, there can be a lag. It can be a couple months before, GDXJ, which also tends to, it has a lot of similarities with silver as far as how they trade. That would basically indicate that it could be a couple months before we see, GDXJ and silver really start to get a bid. So it's just not a prediction, but it's just something to keep in mind. Long story short is basically precious metals against the S&P 500. It looks like over the coming months we could be seeing the start of a bullish shift here, and that would be really, really significant for the sector. That would give the sector a lot of legs for the rest of the year and into 2021. Hope you guys enjoyed this video. You can follow all my work. I publish a lot of stuff, a lot of free stuff at thedailygold.com. You can opt in there for my free newsletter. Also consider my premium service. That's at thedailygold.com/premium. Thank you so much for listening to this video, and I look forward to publishing another video for you guys in the days and weeks to come.